What if I told you that you're being taxed right now, as you watch this video? Not by the government, not by your local municipality, but by a system so deeply embedded in our economy that most people never even notice it. But you feel it. You feel it when you go to the grocery store and get less for the same amount of money. You feel it when you look at your life savings and wonder, will this actually be enough? This is the slow, silent erosion of your money's power. The official term is inflation, but that's a boring economic word that hides the brutal truth. What you're actually experiencing is the invisible tax. And the institution responsible for this tax isn't elected. It doesn't pass laws. It operates in the shadows of the global economy. Today, we're pulling back the curtain on the greatest wealth transfer in history. This is the story of how central banks quietly steal your wealth. To understand how we got here, we have to go back in time. Centuries ago, money was linked to something real: gold. Your paper currency was a receipt, a promise that you could exchange it for a fixed amount of gold. This was the gold standard. But it had one major flaw: it was inflexible. Governments couldn't just print more money when needed. In 1913, America created the Federal Reserve. The promise was stability to solve economic problems. But this new system had a small flaw. These people could create money from nothing. And when such power is given, there is always a hidden cost. For decades, the link to gold, though weakened, still acted as a chain, a restraint. But that chain was about to break. In 1971, President Nixon made a decision that would change the world forever. He severed the final link between the dollar and gold. Now, money was just a piece of paper with no intrinsic value. It became what we call fiat money, its value based on nothing but a shared belief that people would accept it as payment. So, how is this new fiat money created? You might think it's printed by the government, but that's not the whole story. Over 90% of the money in circulation is created by private banks, out of thin air. When you take out a loan, the bank doesn't give you someone else's savings. It simply types numbers into your account, creating new money in the process. This system is a debt factory. For every new rupee created as a loan, more debt is created. This is the engine of the invisible tax. In 2008, we saw what happens when this debt-based system goes wrong. The housing market crashed, and the entire debt pyramid was on the verge of collapsing. So what did the central banks do? Did they fix the system? No. They printed more money, trillions of dollars. They called it quantitative easing, a fancy term for creating new money to buy stocks and bonds from the very banks that caused the crisis. They saved the banks, but they infected the long-term health of the entire economy. Then, when COVID hit in 2020, the central banks didn't just turn on the printing press, they dropped an atomic bomb. They printed 10 times more money than they did in 2008. The invisible tax wasn't a slow drip anymore. It became a fire hose, flooding the system with new currency. And as the supply of money skyrocketed, the value of your savings started to melt away faster than ever before. This whole story is happening to you right now. Since 1971, the US dollar has lost over 85% of its value. Global debt is now more than 3 times the world's entire yearly income, a number so high it can never be repaid. Think about it. A house that cost your grandparents $50,000 might cost $50,000 today. The house didn't change, the money did. This invisible tax is working in every transaction you make. It punishes savers, the poor, and the middle class who keep their wealth in cash. Meanwhile, the rich, who hold assets like property and stocks, see their wealth balloon as those assets are bid up by all the new money. The system is designed this way, to transfer wealth from the poor and the middle class to the financial elite. So what can you do? You can't stop the central bank, but you can stop being a victim of the invisible tax. First, you have to understand the game. Realize that your money's value isn't in the number on the note, but in its purchasing power. Inflation isn't a natural disaster. It's a deliberate policy. The treadmill is speeding up. You are not running too slow. Second, become an owner, not a borrower or a simple saver. This system punishes savers and rewards owners of real assets. Convert your depreciating cash into things that have real intrinsic value. Your skills, a business, stocks in good companies, or even property. These things can act as a shield against the erosion of your money. Third, seek financial freedom through knowledge. Learn the history of money. Understand why traditional assets like gold and silver have been a store of value for thousands of years. and learn about new alternative options like Bitcoin, which was created specifically as an escape from this very system. This invisible tax will continue. The question isn't whether the system is broken, it's how long it can last before it breaks completely. This isn't about spreading fear, it's about spreading awareness. Awareness is the first and most powerful step you can take to protect yourself from this silent theft. If you found this video insightful, please give it a like, subscribe to the channel, and press the bell icon because we keep making videos on such important topics. In the comments below, let me know. When did you first realize your money's value was decreasing? Thank you for watching. Stay informed and stay financially smart.